If you look at the dot-com bubble, those 4-year cycles, like it's pretty much just up only. Their dips were not the same kind of dips. Bitcoin, it'll go up to a new all-time high, and then it'll retrace all the way back down to the previous all-time highs, like some deep dips.
People talk about how it's too late to get into Bitcoin. It's too late to get into Ethereum, but I just think that's crazy. We're just so early still for any of these.
The vast majority have no idea what they're doing investing, strategy, risk management-wise, like any of these things. Okay, I have some altcoins that I think are amazing. I'm so bullish on. I would not stick my life savings into that one altcoin. And the reason is because no matter how good that altcoin is, there's a chance it could fail. And this bothers people because they want certainty and they listen to people who sound certain. People that are the most certain on YouTube are also the people that are the stupidest on YouTube. I'm on a streak with you. So every once in a while I text Andy and I say, hey, check out this project. And
Jesse,
so far,
money.
I haven't missed so far. But what I'm really big on right now is not actually a token yet.
Welcome to the Andy and Friends podcast. I'm your friend Andy, and in this episode, I talk with fellow YouTuber and crypto enthusiast Jesse Eckel. We talk all about what's going on in the market right now, when the bull run will finally heat up, what's next for cryptocurrency prices, how to navigate this time that we're in if you are newer to crypto, why crypto gaming and AI will be huge, and Jesse even lets me in on a few crypto plays that are still super early that could make a lot of money. You don't want to miss this one. Okay, and here we are on the podcast with Jesse Eckel. How are you? Good to see you. It's been a while.
It has been a while. Couple months. I guess it's been longer than that. Been 6 months, whatever. But yeah, I'm excited to be back on the Andy and Friends pod.
I'm Andy, and you're the friend. So
yeah.
Welcome, friend. This year, I'm assuming you have the same opinion as I do, because a lot of other people seem to think so. This has been a crazy year for crypto so far. It has exceeded all my expectations. I'm curious, do you feel like that? Like, what has surprised you the most about this year so far?
Surprised me the most, I guess, the crypto taking off so quick from the ETFs. Like, I knew the flows would have an impact. And I think last time we had a pod, we talked about that, like how the flows would impact the price. But how fast and how swift that happened, more like how easy it happened, was pretty shocking to me. And I guess it was a taste of like, wow, Wall Street money and the amount of money they have to throw around is just like a whole different league. And that was just them dipping their toe in as far as things go. So that was maybe the most surprising thing. Outside of that, it has really not been that eventful. I feel like we had that big run up. Meme coins popping off early. It caught me off guard initially. But the more I thought on it, the more I had like a really solid theory as to why that happened. But for a little bit, a lot of people were saying, hey, is the cycle going to end early? Typically, this is late market cycle behavior. And I never really bought into that kind of like concept of like, oh, the cycle's over early. But it was surprising to see meme coins pop off as aggressively as they did so early in the cycle.
So the very rapid rise of Bitcoin's price after ETF approval, which I was not expecting at all. We've never had a cycle where it's hit new all-time highs before a halving event. Unprecedented. Does this give you pause? Did this make you excited? Like, how do you feel about that?
So that a lot of people bring that up, that it hit all-time highs before halving. This is so unprecedented. Everything's different. Okay, but a couple things. First off, when it counted and adjusted for inflation, Bitcoin did not hit all-time highs. So the all-time high inflation adjusted would be about 78 or 79,000 or something like that, 77, somewhere in there. So it didn't hit that. But secondly, like even if it did, right? Even if it did surpass inflation adjusted, we just unlocked Wall Street capital. We had a lot of capital from that flow in. And so in this leg of the cycle, things went a little higher than they normally do. That sounds like reasonable. That doesn't mean it's broken the pattern. That doesn't mean this time it's radically different. That seems like a pretty reasonable thing that you could expect, seeing as, Wall Street has jumped into the picture.
So sounds more like you see this as it did not give you pause. You see this as just the first step of many going into the cycle. Is that right?
Yeah, nothing's different than the past previous cycles. So right now, the reason people were freaking out is because it was a NASDAQ article that was published, and it was called The Left Translated Cycle. And it was this guy basically breaking down and saying, hey, if you look at the dot-com bubble, it went in 4-year cycles too. So originally, I think he mapped it out from 1986 or something, and he said every 4 years you had the same kind of 4-year cycles like crypto has. This is what new technologies always go through. You had a year down period, 3 years up, and the first three it did the same pattern. The fourth cycle, it broke pattern halfway through. The entire market like plummeted, and then we had like a 16-year bear cycle. And so that got a lot of people talking. Everyone was quoting, "Oh, left translated cycle. We're having a left translated cycle." But I went back and like looked at what this guy's research. It isn't the same. Oh, like not that you should like discount it right off the bat, because I think you should always be open to all possibilities, and definitely should be open to the possibility this time it's going to be different because eventually it will be different. Eventually the cycle will break. That is like a fact. There's no way it goes on for forever. But what he was comparing is like comparing apples to oranges. If you look at the dot-com bubble, those 4-year cycles, like it's pretty much just up only. Okay, like if you look at those charts, it's like their dips were not the same kind of dips. It's not with Bitcoin, it'll go up to a new all-time high, and then it'll retrace all the way back down to the previous all-time high. It's like some deep dips, and that flushes out a lot of leverage and makes the market really really healthy. You didn't see that with the dot-com bubble. It would go up and it would do like a little mini dip, like kind of like it feels like a baby dip to us, like a little dip for ants, and then it would go up. And so it was like basically, almost 17 years or whatever of just like up only mania. People were at like peak frenzy at the height of the dot-com bubble. Everyone and their mom was buying internet stocks. There was a total craze and mania around it. And so a lot of people were saying, well, we just, we're going through that in crypto and everything's going to collapse. But if you look around, you're not seeing that. There's no mania. Like within the crypto space, people are buying meme coins, right? And my theory around why they bought meme coins is really, really simple. And all it is Solana had a run up. Like it had a massive crash, flushed down everything. And then because it went so low, it could then go back up so high. It had a big run up that spurned kind of like this craze around the Solana ecosystem. But if you've ever tried to trade on Solana, there's just not any good projects on Solana. Like quality blue chips doesn't exist. Think of like the normal cycle rotation, right? You have like people invest in Bitcoin. Once they feel like they missed out of the opportunity, they move down to the blue chips. Once they feel like those have gone up high enough and they've missed out on that opportunity, they go down to like the kind of the lesser alts. Once those have skyrocketed and they feel like they missed out on that opportunity, they move down to the Ponzi's and all the just like craziness at the bottom, right? Everyone's trying to get like an opportunity to make, become a multimillionaire. Same thing played out in the Solana ecosystem. People missed out on Solana, so like, okay, but what's the Solana beta? What's going to be the next thing to go up because Solana went up? So they started looking for good projects, and they're like, where's there? Not a lot's been built in Solana right now, so there really wasn't a lot to bet on. So they kind of like skipped that and jump straight into NFTs and meme coins. And even NFT collections, there was like just a handful. And they skyrocketed. And then it was like, okay, cool, meme coins. And they went nuts, crazy, because all that demand is skipped all the other cycles straight to meme coins, all that capital. And they just, the wealth effect from Solana going up so much caused those all to skyrocket. There's a huge mania around it. And then that mania and contagion kind of spread to other blockchains. And so that's why we had the meme coin cycle, in my opinion. But like retail never showed up. Your channel stats will show that. My channel stats will show that. I've done polls. I've talked to people in real life. I've had other people poll people. Retail by and far is not here. They don't care about crypto. They still think it's a scam. And until retail is in a mania phase, we are not going to have an epic crash. And so I'll adjust as that changes. But to me, we're on the same path we've been on for the last couple cycles. Nothing has changed.
Yeah. Yes, it's a very interesting space. It's a very wild space. This last cycle we saw Bitcoin high of almost 70,000. We saw Ethereum high of almost 5,000. And then the bear market, we watched Bitcoin drop to below 16, which is lower than the previous cycle's all-time high. We watched Ethereum drop below 1,000, which is below the previous cycle's all-time high. And that's rough. I mean, if you're a new person to the world of crypto and you haven't really truly experienced that, you've seen it, you understand on paper what that's like, but you don't actually understand it emotionally and what it feels like to go through that. That's jarring. So I think that's something, and I want to know your thoughts on this. I think that's something that will erode over time. the farther down the line we get, maybe that's not this cycle, maybe that's not the next two cycles, but at some point in the future, the cryptos that emerge as the ones we all use all the time, the volatility will become lesser and lesser as it has wider adoption, larger market caps, all this. But at that point, most of this upside that we experience now is gone as well. So I'm curious what you think about that.
Yeah, I mean, I agree that as time goes on in crypto, like, oh, let's look at Bitcoin. As Bitcoin gets bigger and bigger, there's just less upside. Like, it can't continually grow for forever, right? Like, it's a $1 trillion asset. How much bigger can it really get? Maybe it goes to 12 trillion. Maybe it surpasses, 14 trillion, whatever surpasses gold. That's pretty big. It's huge. But like, once it's at 14 trillion, to double, it would have to go to 28 trillion. And so it's like, just at that point, yeah, it's going to be really not super volatile as far as things go. But I don't know. So I disagree with a lot of the left translated cycle, but one part I do maybe I do give a little credence is this concept that the fourth cycle could be different, right? Because been a pattern established. So people start to recognize the pattern. And so when retail does jump in, I think they're going to be like, hey, we've seen this happen before multiple times. We know what's coming next. So they're going to go all in. And think of it like falling from a certain height, right? Like if you fall off a 5-foot ledge, you're fine. 10-foot ledge, maybe like some slight injuries if you're depending on how big you are. 20-foot, 30-foot, 50-foot. The higher up you go, the more like dangerous it gets, right? And so if this is our .com moment and we see crypto prices just skyrocket, there's something to be said around last cycle not really having that parabolic run up like we typically do. I think there was some interesting kind of like macro things with interest rates and in the way that that kind of affected the cycle last time. And there could be some dampened demand, right? All that money that was printed last cycle, it's still out there. It's not like it's disappeared, right? People act like, oh, we need to print another couple $1 trillion for it to matter. But no, all that money is still there somewhere. Maybe it's in treasuries, maybe it's in like safe savings accounts, um, different investments, but it's still there waiting to flow back into risk assets. And so, in my opinion, if we have a mania, maybe we see a lot of liquidity flow into the crypto ecosystem. Things just really skyrocket way too high. A mania beyond all manias, where people are just like, how is this even possible? The absurdity that happens will just make people's like jaw drop. But when you have that kind of mania, it always is going to end in like an epic crash. And so maybe we do crash so hard that we do have that kind of 16-year bear cycle. And if you look at the .com, it was not like it was a 16-year bear cycle. When they say that, it's like for it to reach its previous all-time high during peak mania, it took like 16 years, and inflation adjusted, it was like 20 something years. But the mania for the .com went out of control for one. And
And is that I'm sure that's an aggregate though, right? The entire space. I'm
the
sure there's
entire space.
outliers that did recover faster and things like that, right?
Yeah, and if you look at the bottom of that, it's like 2003 to 2020. It's like internet stocks did really, really good. So in the same way, it's like a 16-year bear market. That's what they say, but in reality, it's like as long as you don't hold it from the top to the bottom, you're fine. You sell at the top, you jump back into the bottom, and then it's actually a 16-year bull market from your perspective. Does that make sense? So I do think we could experience like some volatility still if we run up in price high enough and then dip low enough, and kind of repeat the same process we saw with the internet.
Interesting. Yeah. Yeah, and that's a totally different debate too. What you're talking about, what is the continued upside? What does that look like? What is the potential there? We've talked about this in the past. You're much more Ethereum focused, and I'm much more Bitcoin focused. I think Bitcoin could erode so many sectors of markets that it could be in the hundreds of trillions of dollars or something if everything went right. But maybe that never happens. But I certainly agree that the higher and bigger things get, the less potential upside or less potential volatility. But I still think no matter which thing we're talking about here, Bitcoin, Ethereum, any litany of other positions, we're still incredibly early because, I mean, last cycle, I mean, I don't know if you know the stats, but last thing I looked at, it was like 330 million active wallets in the last cycle, which is what, drop in the bucket when it comes to like world population.
And it's not 330 million people. Like, I myself
Right.
have a lot of different I don't
Yeah,
have just one
exactly.
wallet. And so, like, the amount of people actually transacting is, like, really, really small, and then the amount of people, like, transacting on chain and doing, like, on-chain things is, like, really small. You'd be shocked by, like, some of the biggest apps in crypto that are generating all these fees and money. Like, it's a small amount of users actually using it. And so when we see those things pick up, things will get out of control. It's gonna get nuts.
I mean, I mean, where does it come from? I'm sure you encounter this a lot, again, because you're much more Ethereum focused than me. But it's got to have some of the same comments. Yeah, I've had people talk about how it's too late to get into Bitcoin, or people will say it's too late to get into Ethereum, or anything else in the top five. It's too late. I've already missed the boat. But I just think that's crazy. We're just so early still for any of these. I mean, what is your thought? How do you respond to that?
So that comes from, like, most people really don't understand investing. This is kind of what I've learned is, like, there's the vast majority have no idea what they're doing in investing, strategy, risk management wise, like any of these things. And so when they say we're early, or they say, Bitcoin's boring or Ethereum's boring because it's, too big or whatever, they genuinely don't understand what they're doing, and they're more gambling than anything else. And I think people need to understand, like, kind of risk adjusted gains and, like, how that works, right? Like, um, if you have $100,000, right, you're not going to stick that into a meme coin unless you're like a multimillionaire, right? You're not going to stick that into a meme coin because the odds of you losing that are so high. Okay. That's a stupid thing to do. Or even to stick it into, like, any normal altcoin, even if it's a really good one. Okay. I have some altcoins that I think are amazing. I'm so bullish on. I would not stick my life savings into that one altcoin. And the reason is because no matter how good that altcoin is, there's a chance it could fail. There's no way you can actually with certainty know whether it will or won't. And this bothers people because they want certainty, and they listen to people who sound certain. And it's such a mistake on YouTube. The most people that are the most certain on YouTube are also the people that are the stupidest on YouTube. And the reason is because there is no such thing as certainty in investing. It is all a game of probability. It is poker. And I like to give this poker analogy a lot because it just makes so much sense to people once they hear it. Okay. If you're playing a game of poker and you get a hand, say you like start with like a good hand, right? You maybe got two aces or something. You're like, ooh, this is a good starting hand. Well, you still have to do risk management, right? Like, even if you have a perfect, amazing starting hand, that doesn't mean that the cards that get laid out on the table are going to be in your favor. Okay, maybe you have a perfect start. You have two aces, but maybe laid out on the table is a 1, 2, 3, 4, 5, all in spades, and you're holding two, aces in hearts, and you're like, shoot, like, I had a good starting hand, but if you went all in on your starting hand and the table plays out differently, you still lose, right? So the starting hand would be like a project, right? You might have a really good project. It might actually be really good. You did all the fundamentals. You did a lot of analysis on this project, and you're like, you did a good job. You were right. That was a good project. But there's a certain amount of probability and luck and just things playing out that you have to wait for and see. And so no matter how good that starting hand is, things could not go in your favor. And people also assume that they're going to win every single investment. And that's absurd. It's like playing poker and saying, I'm going to win every single hand. It's just, no, you're not. You're going to lose a lot of those hands. That's risk management. That's where you say, hey, I'm willing to bet this much on this hand, this much on this hand, this much on this hand. And maybe on certain plays, you do a little bit more. And certain plays you're unsure if you do a little bit less. It's an overall game, right? You're playing the overall game. If you're good, you can win the overall game and come out way on top. You can make a fortune, but you have to do it knowing how to manage your risk and how to have a strategy coming into it. And so I think people look at Bitcoin, they look at ETH, and they say, those are boring, but they're really they're low risk. Okay, and low risk has a place. Like when I went all in on the market in 2022, I put it all into Ethereum. I could have done it also all into Bitcoin. And because those are super low risk. If I'd have done it like, I would have made more money if I'd have done all in on, name your, altcoin that went up, right? But I could have also lost all my money doing that. And I couldn't have known that in hindsight. Like, that hindsight bias, I could see it now, but I couldn't known it then. And so it's a place you can put a lot of money as you're figuring out where to disperse that money and how to diversify it. And so that is kind of the game with Bitcoin and ETH. It's like I call it a transition asset. So I like when I'm jumping in the market, goes into Bitcoin and ETH. If I want to put like even right now, if I'm like, hey, I want to put some money into the market, I'm just going to put it into Bitcoin or ETH, right? And then I'll figure out where I want to divert it to over time. And so that's how I play Bitcoin and ETH. If you're lazy and don't know what you're doing in crypto, maybe it's like your little savings account. You're tucking it away in Bitcoin. You're tucking it away in ETH. It's a lot lower risk. Until we have like on-chain crypto index funds, those are your best plays when it comes to that.
Yeah, yeah. Unfortunately, the reality is that the road to where we are in crypto is littered with graveyards full of projects that had incredible ideas, incredible teams, awesome execution, and just still didn't work out. There's 14,000 plus tokens and coins listed on CoinMarketCap and CoinGecko, and it's just crazy to think that this all these are going to work out. So I think that is really wise advice what you just said, because
Can
a
I give
lot
you
of
an
people.
example real quick? Can I give you an
Yes,
example?
please.
So
Hmm.
recently I had two projects, okay? One of them I was so bullish on. It's called Prisma, okay? Prisma. Genius idea. It's really so you know what LSTs are, like liquid stake tokens. LRTs are liquid restaking tokens. There's this new stablecoin model where you back a stablecoin. Traditionally they're backed with treasuries, backing them with liquid stake tokens, so liquid staked ETH. It's really cool, totally new concept, really awesome. But then people were like, hey, Prisma was like, hey, what if we back them with liquid restaking tokens? We made, they called their stablecoin Ultra, and we back it with liquid restaking tokens. And for me, I was like, wow, that's actually a genius concept. I love it. Um, they have really good branding, really great website. As far as narrative, like they're tapping into what I believe is going to be one of the biggest narratives this cycle, which is restaking. I think restaking is going to be huge. It checked all my boxes. I like have this pretty rigorous investing process where I'm doing my research. It takes me like 40 minutes to go through a single project, but I have like all these check boxes that I have to go through every time, so I don't miss anything. Involves checking the Discord, involves checking like governance votes, everything. And this thing ticked all the boxes. So I was like, great. I put like a pretty decent like investment. It was like 3% of my portfolio, 2%, something like that into it. And this thing proceeded to go literally straight down. Like it's down like 80% at this point. It has just been the worst, the absolute worst. And it's nothing I could have seen in like ahead of time. Like literally it checked all the boxes. If I went back and re-looked at it, it's not like there's something I could see now and be like, oh, I missed that. There's nothing I can see that I missed. It just didn't work out. And that happens. And and it sucks. It sucks when it happens. It ended up being that one of the people that was invested in it just is this constant sell pressure. They're just constantly selling it. They're an early stage investor, and they just are literally selling their entire portfolio. And then they had a hack that happened. One's a black swan. One's a thing I just couldn't know. There was another project that was called Data Lake. It was like a really low quality project, really small. Website was horrible, basically vaporware in my opinion. Okay, I still like not very much money, like a little bit in it. I forget why. It was one of the videos I made. I was reviewing like different AI projects or something like that, and I stuck some money in it. This thing proceeded to go up like 2,000%, like out of nowhere. And it literally is just garbage. Like I don't like this project. And it went up 2,000%. And this other project that I was like, this is amazing. It's just been down only. So like even though you might feel like, wow, this is a really good play, that doesn't mean you can throw everything in on it. And you have to do risk adjusted. You have to be like, okay, not everything is going to go the way I think. Probability might say it will, but that doesn't mean it will happen. Sometimes the weird thing happens instead of the thing that's maybe more probable.
Yeah, I think it's a good when you go into any of these things, it's good to just assume right out the gate this could fail, like this might fail, and then look at your overall strategy and go, how would I survive that? How will I deal with that? And if you can answer those questions successfully, then you're probably employing some decent risk management. But yeah, a lot of people go all in on these things. They make this project their entire identity. They retweet everything the Twitter account puts out. They comment on everything in Discord. They live it, breathe it, talk about it constantly, and it just, dashes hopes and dreams sometimes, unfortunately. It's just one of the downsides to this space is just how cutthroat it is. I You talked about this checklist, and you don't have to give away your secret sauce, but could you give 3 or 5 things that are on that list that you don't mind sharing that you check in when you're looking at crypto projects?
Yeah, I mean, this is gonna sound stupid to you, but, like, I find, like, 9 out of 10 people somehow still don't understand this, and that's that, like, for the average person, the first thing you need to hear is, like, you need to understand what the market cap is and, like,
Mhm.
how that relates
Yeah.
to the price,
Yeah.
because still so many people look for, like, tokens that are, like, a low price, and they don't understand that that doesn't mean anything, like, at all.
Mhm.
Like, it could be 1 cent and be, like, a really big token, and it could be $10,000 per token and actually a really tiny project. Like, the price doesn't matter, the market cap is for, like, this is really basic beginner stuff, but, like, if you're a beginner, that's what you probably need to hear, is that you need to look at the market cap. The second thing you need to look at is the fully diluted value. That's something I think that even more experienced people still don't look at, but is really important. That shows you if all the tokens were in supply, like circulating, what the market cap would be. So, like a big disconnect between that should scare you. So, if it's $1 million token, but the fully diluted supply is 10 billion, you should be scared out of your mind to touch that thing because that means there's a huge amount of unlocked or locked supply that's going to come onto the market that's going to just decimate the price of that. And you can really easily think of it as like a rare Pokemon card. There's only one of them, and you're like, wow, this thing's worth $1 million. And then, like, in the Pokemon warehouse, they're like, "Oh, we found a million more of those cards, and we're putting them on the market. What do you think would happen to the price of that rare Pokemon card?" That's kind of fully diluted supply. The circulating supply would be that one Pokemon card. The fully diluted would be the million that are in the warehouse. And when those hit the market, everything's going to crash. So looking at fully diluted is important. If there is a disconnect between that, looking at like token unlocks when that's going to happen, that can give you a huge advantage. So being like, okay, the fully diluted is pretty big, but when are these tokens actually unlocking? Because a lot of times, if it's like VCs or angel investors, they'll have like a 2-year vesting period. And so if I see it and it's like right now, if I'm like, oh, it's in 2026, I don't really care because if that's the first time they're going to start selling, I plan on being out of the market before then, and so that doesn't bother me. But if it's like 2024 or 2025, that starts to give me pause, depending. And sometimes you'll find weird stuff like immutable. That's a weird one where like there's a weird what every crypto like market cap or like CoinGecko says is like the actual circulating supply isn't actually the circulating supply. This took me so basically, like the tokens that they say are in circulation are held by the Immutable Foundation, and for those tokens to actually enter the market, they have to go. They're like given out as incentives to projects to build, but if they don't meet certain performance goals, they don't actually get the tokens. And then once they meet the performance goals, those tokens still have to vest for a period of time. And so there's like sometimes you'll find some weird alpha like that, and you'll be like, oh man, the market cap says this, but in reality, the circulating supply is this. Um, I always
For
look through
finding those, unlocks, I've used CryptoRank in the past. What do you use to see all that?
a lot of stuff. Token unlock, DeFi Llama, token terminal, sometimes just the white paper. It
Yeah.
really project by project it depends. Smaller projects, they're really hard to find. Yeah, I'll look at the recent Twitter posts. I'll go join the Discord, look at the Discord announcements, governance votes. Those are all really important things to find out like if the project's like dead, because sometimes you'll see a good project and you're like, oh, this is a dead project from last cycle. I don't want to touch this. Or, like, oh, they have no roadmap going forward. Like that's not a good thing. Um, I will look at in general, just trying to understand what the project does, where it fits into like the narrative landscape, like what sort of narrative it's planning on tapping into. Always looking, obviously, the website tells you a lot, about the quality of the project. Then the volume on the project. There's a lot of different metrics that I go through. I'm trying to think of them like off the top of my head, but yeah, like those things plus a bunch more.
Some people, on their checklist, they have the team, and, they get really turned off if the team is anonymous. They really want a public team. Do you care about that? What's your view on that?
It depends on the project. If it's like a really small, it really depends on the project. So that's a project by project basis. If I like get some weird vibes from the team or from the project, and I think they might rug because it's like a small project, maybe that bothers me. But if it's like a pretty well known project and it's anonymous, then that doesn't bother me because I'm like, oh, cool. maybe have an anonymous track record in the space, right? Like they've been building for years, they've been safe. That is not going to bother me as much.
Yep. Well, cool. Well, thanks for sharing that. So, to jump back to this whole market talk, I'm curious, based on what we've seen so far, based on what you've said, maybe it seems like it's just business as usual. But I'm curious where you think we are right now in this cycle. Where will we be at the end of this year? When does the bull run truly kick off?
So I would see late 2024 is when we get like a lot more action, and then through 2025 at some point. So okay, so if you're looking at left translated cycle theory, then you would probably think it's possible the cycle ends late 2024. It's like a really early cycle. And if you want to know if that's going to happen, you're going to have to look for all the signs of like super froth, mania, and just things are getting way too out of control. And it's worth paying attention to that, I think, because there's a certain probability that is the case that could happen. Don't discount it because otherwise you're stupid. You should be open to that. The second one would be like summerish of 2025. Keeping an eye on that date as well. And just, possible. But like the most likely one, in my opinion, is like late 2025. So some point between September and December 2025, I'm out of the market by then. I will have sold everything and I will be done. But I would say on like maybe there's a small chance late 2024 it ends. And then also on the other side of things, there's a small percentage of chance that like it goes into like 2026. Um, that'd be a weird outcome, and that's a pretty scary one because it's like never happened before. So you're having to assume something that's never happened before. But yeah, so that maybe that's the spectrum of possibilities, and you're keeping an eye on all the metrics to try to assess like where we are in the overall like scope of things.
So, many of the replies I get sometimes that say that the bull run is already over. We can't discount it, but you're not necessarily a subscriber to that theory. Is that what I'm hearing?
No, well, like that it's already over right now. I do discount
Yeah.
that, so I would disagree with that. There's no way it's over right now because
Yeah.
you got to understand that like bull markets, like we crash in crypto for a reason. Like it's not like it's just mindless, just we crash. Like it's always a reason, and it's just normal human psychology. Like if you we establish a really long period, typical cycle. You establish a really long period of uptrend, right? Where like people are like, wow, Bitcoin and crypto, it just keeps going up and nothing seems to stop it. Like it's bulletproof. And the more people start to believe that, the more people start to put money in and the more money they put in. And when the markets inevitably get to a point where everyone's like, hey, crypto is going to continue to go up, if you believe, like just ask yourself, if you believe like 100% that the markets are going to continue to go up way higher from here, why don't you take out a little bit of credit card debt? Why wouldn't you put your life savings in? Why don't you sell your house to put it into crypto? If it's going to go up only, like that seems like a reasonable thing to do, which is what people start doing, right? Because they make that assumption, they start doing that. That's where it goes parabolic and it just really skyrockets. And people are like, what is happening? That's all that leverage entering the system and people going like max risk because it's like they think they're going to become a millionaire overnight. And when that happens, the market gets really unstable and unhealthy. And when the market is in that unstable, unhealthy environment, because there's so much like debt and like just people's life savings on the line, any little like rock thrown at it, any little stone cast at it, like causes the whole thing to start crumbling down because people like lose their mind, right? And when that happens, the whole thing collapses and it collapses hard. It's again that same theory of like the higher you go, think of a maybe a wood floor that's made out of like a thin sheet of wood. Maybe walking on it's not going to break. Maybe jumping 3 feet off it's not going to break. But if you take someone high enough and drop them onto that thing, it's going to collapse and it's going to go a lot lower. And it's kind of like that with the market. So the market's collapsed for a reason. It's not mindless. And until the froth and the unhealthy, stuff's gotten into the market, the leverage. Think of Luna last cycle. Think of all the weird stuff with Three Arrows Capital and FTX. Until that happens, we where are we going to go? Like, what are we going to collapse to? The market's healthy. All the liquidations or all the leverage and all that's already been pushed out of the market from last cycle. There's just not like, it's not unstable right now. So it's not going to collapse. And we have the, Wall Street is still going like super bullish on crypto. Like Larry Finks hasn't stopped now that the ETF's out. He's like, hey, crypto's the future. Tokenization is the future. Everyone's going to be in crypto. Everyone's going to own some Bitcoin. He's still saying that. And all that's still just getting started. So no, there's no way that this market's already over. There's like, that is not possible yet. Could it end early? Yes. But the signs aren't there yet.
Yeah, I appreciate your perspective of, that the corrections and stuff are healthy. I know I've read on Twitter a few times where you've seen some of the big accounts talk about, $200 million in liquidations today, whatever, and you reply and and quote tweet and say, "This is good. This is healthy. We got to get this out of the system." I think that is a great perspective to have, and we just realize that there's a lot of degen stuff that goes on in the space. There's a lot of bad things that happen when the market does get really frothy and crazy, and everyone's like, I'll be rich tomorrow. These are good things if we want crypto to be around in a decade. We need to get stuff out of our system. We need to go through these, healthy cycles and stuff. But you just brought up one of the big
Well,
topics I want to.
I was
Oh,
gonna
go
say
ahead, please.
it's not even just for in a decade. Like it really this same kind of like fundamental principle is like throughout everything, right? If you have a kid and you raise this kid to like in a bubble and you're like, hey, oh, you stubbed your toe. It's okay. Let's put you on the couch. Just sit here. We're gonna rest your foot up. You can just watch TV all day. You'll be fine. Oh, you want to eat sweets? Like you can just eat endless sweets and you pamper them. Okay. That child becomes really unhealthy and they're not very resilient. And you throw them out into the real world. You throw them out into, they grow up and they get in a fight, in a brawl. That person's going down. They're weak. Okay. Where if you have this, person that's like, they grow up raised by wolves essentially, and they're like in the forest and they're getting beat up and they're falling out of trees and they're scraping their knees and they're, using their muscles and building up muscle because, they're lifting things, they're carrying things, they're having to fight off, think about back in the day, they had like shepherds, right? Shepherds in the wilderness and they're like fighting off lions and bears. And these people were just wild. Okay. Those kind of people, you become really strong. You become really resilient. Okay. And you could throw stuff at you and it's just like, it doesn't bother you. Right. Now, 10 guys attack you and you're like, whoa, 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 take them down. Right. And so, it's that same kind of concept. Like, the easier things are, even as a society, right? If you live in luxury and things are easy for a society, you notice it becomes really unhealthy and the society gets really unstable and historically eventually collapses, right? Like Roman Empire, all that stuff, right? Eventually it'll collapse. And then when it collapses and things are hard, people are starving to death, there's like wars happening. You have all these strong people that kind of rise to the top. People become strong, they become hardened. And those people build a really good society that makes things really easy. And then the next generation, like that cycle, hard times make strong men make good times make weak men make hard times. That same concept, but applied to the crypto markets, but applied to people, but applied to anything, ends up playing out. And so with crypto, you want the liquidity, the liquidations and all that stuff, and makes the market resilient, makes it hard, makes it strong. It's when it goes up only that it gets weak, and it's easy to attack and topple over.
Yeah, I like that. And you heard it here first. Breaking news. Jesse Eckel says that crypto people were raised by wolves. So let's all embrace it. Let's get strong. I mean, it certainly feels like that after after surviving a few cycles. You do,
Yeah.
you get hardened to certain things, and it's good. You got to become more resilient because cycles are not easy to deal with, especially as a newbie in crypto.
Yeah.
So you talked about, you just mentioned again the ETFs. You again mentioned Larry Fink. You're out there cheerleading crypto. When the Bitcoin ETFs were approved, everyone was like, okay, ETH is going to happen next week. ETH ETF is going to be right around the corner. And I don't doubt that we'll probably have an ETH ETF. But, I kind of suspected it wouldn't be immediate. There's got to be a road to it. And now we have in the news, SEC, Ethereum is a security. And then Consensus is suing the SEC to say, no, this is wrong, whatever. So you being someone who is, kind of my go-to to talk about Ethereum, what's your take on all this? What's this look like? What's the path forward? All that good stuff.
Well, so the SEC never said that Ethereum's a security. It's just that it came out that behind the scenes they were possibly investigating to try to go after and claim that Ethereum was a security. But you also have to understand that they approved the ETH futures, which puts them in a really weird situation of like, if they say it's a security, but they approve that, then why did they approve that? Because they would be listing an illegal security. Like it wouldn't make
Which they
any
did with
sense.
Bitcoin too. Yeah.
Yeah, yeah. So I don't know a lot of the details about like why they think that, but it's Gary Gensler, it's the SEC. They're unhinged at this point. Like it's really clear. Elizabeth Warren, she's unhinged. She's like, I mean, what was the latest thing? Like she's like, oh yeah, crypto is used by terrorists and drug traffickers, and now she's like, it's used by child sex traffickers, and like literally any bad thing she could think to like attribute to crypto, she is like sticking to it. And the
The
SEC
latest
too.
latest news article I read this morning was she wants the US to step in and stop Iran from mining Bitcoin.
Yeah, see, they're literally unhinged. Like they're losing
Yeah.
their minds. And so the SEC wanted to go after Ethereum after already declaring Ethereum wasn't a security and then trying to say, okay, cool, but now we switch to proof of stake that changes things or whatever. But even though we listed a future, it won't hold up. Like they could do it, but they'll lose in court. And so it really comes down to, are they going to take it to court or not? Which they have been taking a lot of things to court. It seems like right now their tactic is, hey, we're just going to sue everyone and see what the courts say. And if the courts say it's legal, then we won't do it. But yeah, I don't know. I feel like the SEC's lost a lot of credibility in most people's eyes. Like at the start of this, people like feared the SEC. Now it's like every crypto company is suing the SEC and they're winning over and over and over again. The SEC is getting like chewed out by the courts. They're getting like in trouble by the courts. Like lawyers are getting fired and having and leaving the SEC because they're doing literally illegal things that they shouldn't be doing. And so, yeah, as far as the ETF goes, you have to remember that Larry Fink wants this to happen. And why does Larry Fink want this to happen? Well, Larry Fink isn't like a Bitcoin maxi. Larry Fink is a BlackRock maxi. And Larry
He's a
Fink,
fees maxi.
he's a fees maxi. And so when he lists the Bitcoin ETF, and he's like, it has been the most successful ETF in history by far. It is blown away expectations like through the roof, like not even close. And they see that and they're like, oh my gosh, this is an untapped gold mine. The crypto space, all the products we can launch, it is going to be insane. And that's what they want to do. They want to build out their entire crypto like sector of like new products they can sell to people. And from their point, it's probably like really more like about selling exotic products. Like people are bored with the stock market, bored with, people have got a bigger risk appetite. Giving them Apple stock, anyone could do that or whatever. But they're like, hey, we could this crypto thing you don't understand. You want to get into that? And then, people are like, oh yeah, Bitcoin. Oh yeah, Ethereum. Oh yeah, Solana. Like whatever it is. Whatever they can make an ETF or a financial product around, they will, and they're going to sell it to all their customers. And they want the ETH ETF. It makes sense. That's the next thing. They're going to make it happen. I don't think it's going to, like May was the first date. Don't think it's going to happen. Like my expectation was that it would happen this year. We'll see if it happens by late 2024. Right now, most experts are saying the likelihood is by the end of 2025, before the end of 2025, we should see an ETH ETF. And that's good for everyone. That's good for just like the Bitcoin ETF wasn't just good for Bitcoin. It's good for like, because of the wealth effect, right? Bitcoin ETF happens, brings a lot of attention to the space, but also the price of Bitcoin goes up. So everyone that holds Bitcoin, they're now richer. And so they can sell into that and go buy alts or NFTs or like whatever they want, meme coins, whatever they want to buy. So that wealth kind of floods out into every other sector of crypto. Wall Street's kind of like subsidizing all that. So when the ETH ETF happens, same thing. It's going to flow into all the alts, all these other tokens, and it's going to allow a lot of these other assets to go a lot higher than they are today.
It's not just a wealth effect, but it's a legitimacy effect. It's
Yeah.
like once they say this is something we can have a spot ETF on, we can offer this on your plain Jane vanilla brokerage, stock brokerages. It says we now accept this as an actual asset class. Have at, and then it gives the entire industry more legitimacy and says, there's something we see us the almighty smart people of Wall Street see something here. So maybe you should all look at it too, right?
Yeah. And speaking of legitimacy, I honestly, okay, so I love Bitcoin. It's awesome. But Bitcoin is very much a very specific ideology and belief system, right? Of like, why does Bitcoin exist? All this. And it brings a lot of legitimacy to that. I think Bitcoin is allowed, put a lot of highlight on like the national debt. and monetary debasement and all these kind of things. And we're starting to see like in mainstream circles, people start to talk about these things. And these things like really like it's almost like a grassroots roots movements from Bitcoin. Um, I think what ETH will bring to the table that's going to be really interesting is Ethereum is it's like 4 billion annually that it generates in revenue. It's yield generating. But even maybe cooler than that is like this whole ecosystem of apps and different things built on top of it. The vast majority of people still don't understand this. If you talk to the normal person, they think crypto is still a scam. They essentially assume all cryptos are kind of like meme coins and that there's actually no use to all these things. And so I think what Ethereum will highlight is like, hey, that's not true. This thing generates 4 billion like annually in revenue. And I think that'll like open some people's eyes to be like, wait a minute, what are we missing here? Like what's actually going on here? And that's going to bring a lot more attention to a lot of these other like altcoins. And so when you talk about like wealth, like, you're invested mostly in Bitcoin, but you're also invested into a lot of altcoins. And you know as well that like one altcoin could make you a multi-millionaire, like if it goes up high enough. And so a lot of wealth, I think, by current crypto holders is in the future is going to be generated by these altcoins skyrocketing as more people start to appreciate that these things are actually useful and they do have utility, especially the ones with fundamentals like Maker, Ethereum, a lot of these apps. I think crypto gaming. So that's what gets me really excited. The legitimacy it's going to bring to those things because Bitcoin it has gained legitimacy, but I'm ready for crypto as a whole, Web3, and all these different things to get legitimacy because, I mean, even if you're just looking at it from an investing standpoint, that's when your bags are going to like really, really pump.
I love it. Yes. Yeah. You look at things like Bitcoin or Ethereum as transitional assets, and I do see a lot of merit to that approach. I definitely see it as more for me. I take maybe the lazier approach in some ways, but I work really hard with the rest of my portfolio, and then I view Bitcoin as kind of my foundational asset. If my entire portfolio goes to shit, everything goes to zero, I at least have that. It's my safety net, my savings account of my portfolio. Everything else is risk on stuff, in my opinion.
I like
But
that foundational
e-
asset. I would agree with that.
yeah, but either way, any which way you view it, we all know that the real secret sauce here, if you want exponential growth in your crypto portfolio, you want to make that money. You're going to have to look at things with a bit more risk, a bit more, exponential, parabolic upside. And so me and you are both, heavy in various alt positions and things. We have different narratives we're watching. Um, we've talked about this in the past, but I wonder if it's changed at all, or what are some of the narratives or some of the directions for those alt positions that you have going into the rest of 2024 and into 2025.
Okay, so I believe really strongly. So AI is obviously in a huge bubble, but I think it's going to get bigger. If you look at like the average retail investor, they don't really have a way to get exposure to AI, but they want it. They can invest in Nvidia, but it's huge, $1 trillion company, right? So Google or Facebook, but how does the average person get early exposure to AI? And they can't today. But I think when crypto takes off, it's going to make this perfect like it's going to be this perfect like mixing pot of like, oh cool, I can get early exposure to AI through crypto AI projects. And 99% of them are going to be vaporware, just garbage projects. But I think those narratives are going to hit so hard. Even the garbage projects are going to do so good. So I think that narrative is going to take off and be huge when retail shows up, but not before then. Like right now, you have people like me that are investing in these things saying when retail shows up, it'll go up. So that they're going up, kind of like the early smart money. But the vast, like the long tail of wealth is going to be from retail being like, oh, it's an AI crypto project. That's the most interesting thing to them. Second only to, I think, crypto gaming. I believe crypto gaming, it's probability, it's odds. Okay. We look at probability. We have hundreds and hundreds of games, multi-million dollar funded games, some of them by massive AAA teams. They're really, really good. I've talked to you about projects that are from Ubisoft. And I mean, like all these developers come into space and be like, wow, this is amazing. Especially like as an indie studio getting started, it's just so much easier to raise funds. And it's a new paradigm in being able to own your assets, your gaming assets. And I think all you need is one game to be a hit. And then every retail person can be like, oh yeah, crypto gaming. I understand video games and it's crypto involved. So I'm just going to put money into it. And, with hundreds of games, you just need one hit. It's like, I always give this analogy of like, if you stood at half court and you had a basketball and you had one shot to make it, What are the odds? How much would you bet that that person would make it? And it'd probably be not a lot. The odds of them making it's pretty low, right? But then if you say, hey, from half court, that same person, but they have 10,000 attempts. What are the odds that like how much would you bet that they'd make it? And you'd be like, I'd bet a lot because there's probably at least one of those is going to make it. And so I think with hundreds and hundreds of games launching from really talented teams that actually know how to build games, the odds that we get a really successful game are really high. And then that is the same kind of thing. Like, oh, cool, there's a huge opportunity there. Then everyone's gonna look for the beta and say, oh, this game could pop, this game could pop, this game studio could pop, and then it'll just spread kind of like a contagion, and that whole sector will pop off. Restaking, I think, is still going to be huge. It's harder for people to understand, but fundamentally, like on a tech level, it is actually amazing. The analogy I like to give is like NATO, essentially. This is not even my analogy. It's from Anthony Cesano, but basically, like think of Ethereum like the United States federal government. Okay, think of Ethereum's layer twos like the states. Okay, so like they don't have to pay for security. Bitcoin has to pay for security. It rewards Bitcoin to anyone who's mining. Right, you're a miner, and the reason you run those mining devices is because you get rewarded Bitcoin. You're incentivized to run those devices because you get rewarded Bitcoin. So Bitcoin has to pay for its own security, and it doesn't currently generate enough fees to cover the cost of that. And eventually, it'll hit a 21 million cap in like 100 years, or whatever. And then at some point, it has to generate fees, or else there's it has to or else you'll stop mining, and then who's securing the Bitcoin network? So if you look at layer twos, they don't have the same problem. They get to rent security, or they inherit security from Ethereum, which is the federal government. So if somebody tries to invade the U.S., New Mexico doesn't have to have a standing army. They get to get that security from the United States. Now, restaking is the same concept, but like think of NATO, right? Like a country joins NATO, and then if somebody attacks that country, these other countries come to support that country and like go to war with it. And so that's kind of like what restaking is this concept of like shared security. So like I think I've given this analogy before, maybe with you, which is that say Bitcoin did have an issue and says, hey, like how are we gonna sustain this? We need to reduce fees. They would never do this, but they could always say, hey, we're gonna use Ethereum restaking, and we're gonna lower the amount we have to expend by like 99%, and now we're suddenly sustainable. It's kind of that concept for like blockchains, oracles, and a bunch of different things. So I think that will be pretty big. Um, there's a lot of things happening in the crypto space. It's almost too much to keep track of. Um, but I think a lot of sectors will pop off. They'll kind of go through their own little cycles. I think NFTs will be big again too, mostly because we saw it with Solana. Again, like traditional cycle, they looked for the blue chips. Wasn't very many there, but what was there went up. The alts, again, same thing, and then it went all the way down to NFTs. NFTs popped off, then meme coins, etc. So I think this cycle, later in the cycle, we'll see NFTs pop off again as well. Yeah.
Yeah, if we ever do see Bitcoin asking Ethereum for help like that, batten down the hatches, I think we might be in the end times. That's a sign of the end right there.
Yeah.
That is interesting. Analogy, the states and everything. I haven't thought about layer twos like that. And yeah, you bring up a fair point. Like if you were to remove the block subsidies right now from Bitcoin, you would not make enough as a miner to subsist yet. There are blips. We've had periods where you would, and I'm hoping that's a sign of times to come. But yeah, so far, yeah, the subsidies are definitely needed for that enterprise to continue. But I think it's worth it, and it's all a grand experiment and all that good stuff. But man, I am so on board with AI. Yes, definitely agree. That's going to be just massive in this run. Gaming, 100%. I was just listening to your podcast, talking with the with Shrapnel, which I'm also an investor in Shrapnel. I'm just so excited about gaming because and I don't want to just beat up on previous games and previous cycles, but they were they were rough concepts. That
Yeah.
I don't want to just say they weren't fun to play and they were a bunch of whatever. They paved the way to where we're going now,
Yep.
and where we're going now is actually having legitimately awesome AAA titles with incredible teams behind them. Like I just don't know how you can not listen to what I'm saying right now, or listen to what Jesse is saying, or what he says on his channel, and not be excited about that space, right?
Yeah. No, I 100% agree. I have made some big gaming investments across multiple different things, and I'm early, and I'm willing to take that bet. But yeah, I think crypto gaming is gonna be huge. We're just waiting for that one catalyst. You don't know when it's gonna happen. Robbie from Immutable, he thinks it's gonna happen this year. So they have so many games launching this year, and he says one of them is gonna be a hit. And so we'll see. But I think his belief is that one single crypto game will onboard the same amount of users that are active in crypto today through one single game. And I think he's right. Like there's just not that many people active if you really look at it. It's like in the grand scheme of things. And if you look at how big like a game like Axie got last cycle, I think one game does have the potential to onboard a lot of people into crypto.
And as an investor, and especially someone like me who's really passive income focused, there's again, to use Shrapnel as an example, I have tokens, so I hope that if that game launches, it's super successful. The token price appreciates like crazy, and I make money. Or if it's ones like Gunzilla, their game Off the Grid, which I think is going to be huge. I have NFT validators where as loot boxes and stuff, hexes are unlocked. I make passive, like just as an investor, if you're not excited about the prospect of just millions of people coming into the space because of a singular game or a couple of games, like I think it's so untapped. And yeah, we are super early, and the next year and a half could be just this wild ride with that stuff, along with AI and everything else.
Yeah. Yeah, I agree. And this is where people are like, hey, AI is going to take our jobs. Robots are going to take our jobs. What are we going to do? And then in the same breath, they'll be like, nobody's going to be a full time, playing video games or something ridiculous like that. But if you go back 50 years, they'd say it was impossible. Anyone could be like a full time, just record videos of themselves or like full time, doing a lot of things we do today. And the reality is more and more essential jobs get taken over by automation that frees up people to do more not essential jobs and people to enjoy their lives in different ways. And so, yeah, I think the on chain like gaming economy is going to be so big. People are going to underestimate. I think Eve Online, if anyone's familiar with that, is like a really small example of like what is to come, but like on a way grander scale, where some people's literally their entire lives will be. I mean, hey, I don't want to bring up metaverse again, but it's like it almost is like a form of the metaverse, not a VR form, but like people living in these digital worlds in digital economies, and that's what they do full time. And it's going to be weird. It's going to be weird, but it's going to be here sooner than most people think.
Yeah, I just think lots of people write this stuff off as novelty. AI, ChatGPT, it's fun. It's a novelty. They just don't take these things serious enough. Are we in a AI bubble? Sure, but like the internet was a novelty once upon a time. People
Yeah.
dismiss it and said, "Well, people will never buy goods and services on the internet. The newspapers will never be, will never go bankrupt, and it all moved to the internet." It's just I think you have to see these things and see what trends are forming and then decide if you think there's merit to that having a future or not. But I remember like I was chatting with a family at one point and their high schooler he was like talking about like, "Oh, I love games and stuff and I wish, that could be a career." And I'm like, "The game I play all the time, Dota 2, they have an international tournament once a year, and the winning team of that tournament this last year made $10 million in prize money."
And you could make
This
more as a
what
streamer.
Yeah, and you can it's like we are already on the, precipice of this new, these big paradigm shifts. It's just people need to, I guess, wake up to like see some of the hints that are out there and jump on board before it is too late, right?
Yeah, and you said $10 million prize once a year. Dude, some of these crypto games are doing like it's insane how much money they're giving out. Like millions and
Yeah,
millions of dollars like in just like weekly prizes, monthly
yeah.
prizes. It's because tokens, like they have money printers they can give out. It's kind of like how, some of these airdrops are like $1 billion that people are giving away. Most people it boggles their mind like how does this work? And you really have to understand, I'm not going to get to it in this video, but you have to understand kind of like some of the deeper principles behind like how money works, like how your fiat works, how the government is able to print trillions of dollars. And then you start to understand that concept of like, oh, cool. So crypto, they just like they have their own version of money printers. And so, but yeah, like crypto games, I think 10 million is going to be a drop in the bucket. You're going to see I'm not kidding, billions of dollars worth of prizes and incentives that are going to play out over the next 5 years, where are going to drive people to want to play these games.
Yeah. Based on the maybe on AI or maybe in the gaming space, are there a couple of smaller market cap coins or tokens that you are invested in or that you're looking at that might be interesting for people to go check out?
I'll give you two. The first one I've talked to you about, which I'm on a streak with you. So I like every once in a while I text Andy and I say, "Hey, check out this project." And
Jesse's
so
made me some
far,
money.
I I haven't missed so far. But what I'm really big on right now is not actually a token yet. But it's the Persona NFT collection. Talk to you about that. Um, I've only done I've done some NFTs last cycle, but this cycle I've only done two, and it's been Mad Lads, which went from 2,000 to 20,000. At one point 30,000. And then the second one is Persona. Persona, I'm really bullish for one. I just think it's a really cool looking NFT collection. So it's a good PFP. But two, those who have it can stake it to earn an airdrop in the UNA token. And the UNA token is the Unagi token. It's from Unagi Gaming Studio. All the people that founded it are ex Ubisoft developers. And so they worked on games like Far Cry 3. They've worked on The Division, if you're familiar with that game. And they left to start a gaming studio called Unagi. They've launched two games. They're sports games. And they have over half a million, over half a million signups, and they have about 50,000 active players per month. And so it's a profitable game. They've been doing it for the last 2 years. They've worked through all the kinks, profitable two games. And they want to expand. They want to build out like an entire gaming studio with like fantasy games, all this kind of stuff. They're actually a talented team that came from the traditional space that's worked on AAA games. And their token is going to be for the whole ecosystem is the UNA token. And like I said, the Persona NFTs are like $500 right now, $600. And I think that the airdrop will likely pay for the NFT. I don't know for sure. Airdrop farming is always a risk. Could be $50, but I've gotten a lot of airdrops, and most of them range from like 500 to a couple $1,000. And so we'll see. We'll see it depending on how they do that. But that's got me bullish. I also just think people, because they want the airdrop, are going to push up the price of the the NFTs. It's like there's like 630 available to buy, and that's just not that's not that many. And so I think they're going to push up the price quite a bit from people going after it. And so I'm really bullish on that. I also think NFTs are going to come back big, and the market cap for this collection is like 5 million. So you said small. That's a $5 million market cap. Last cycle, Bored Ape went to 5 billion. And if you look at crypto tokens, every cycle people like the new tokens more than the old tokens, right? The problem with crypto tokens is like most of them are launching at like a multi-billion-dollar valuation because they have all this VC rounds, angel investing rounds, and so it's like to get them early is actually really hard. But this NFT collections haven't done that yet. So this one launched. It's 5 million market cap right now. You get this UNA token. You're gonna stake to get the UNA token plus other perks. And so, if it went to Bored Ape, that's like 1,000x, man. Not that it'll do that, but like, like that's a lot of upside potential for me. I'm like, okay. And so disclaimer, I am heavy into Persona NFTs. So I'm shilling my own bags right now. Just be aware of that. But I'm heavy into it because I believe in it. There's so many people on YouTube that like, they talk about so many tokens. It's the shotgun play. I'm sure you've seen it, where they don't actually buy these things because that's not how they make money. They make money by, running ads on the channel, whatever. They don't actually buy these things. They just name a ton of tokens, and then they pick the ones to write about, and then they're like, "Oh, I did 1,000x," but they didn't. They didn't make any money. And so I'm not like that. I put a lot of money into things I believe in, and I either lose it or I make it. So this one I'm pretty big on. The second one that I'm huge on, I've already talked to you about, but everything has changed for this token. And recently, something happened that like I tripled my position in this token because of it, and it's Index. I've talked to you about Index and how I'm bullish on it, but man, so they recently did this thing called PRTs. They made this thing called PRTs. So freaking cool. So Index is like an index. Traditional industry, you have indexes like S&P 500, different things like that, and they're hugely popular. It's like 20 something trillion dollars that is in traditional indexes. And they just been ever since they've came to the market, they just rapidly growing. This is where most people put their money because they outperform most active managers. So if you hire an active manager to invest in the stock market, you're probably going to make more money investing in an index. It's easy. You don't have to worry about it. You don't have to think about it, and they actually do really well. So crypto doesn't have this, but crypto is so complicated. It's so confusing, and it would make sense that like I'm not. Are you in BRC20? Anything BRC20?
Mm-mm.
Me either, but I wish I was. All the layer twos and stuff. Like
Yeah, I'm
I just
constantly like, oops, maybe I should have
it's confusing
jumped
though.
in.
Like It's a whole
Yeah.
new thing for me to learn. This is my full-time job, and, like, I don't have the time to do that. But if there was a BRC 20 index, I would buy that today. I would stick some money in that today because I know there's gonna be some upside there. And so crypto needs indexes. Like, this is actually a big issue in the space. The problem is with index, traditionally, it's really hard to launch these things. Like, they need incentives to get people to come in and like supply the liquidity. And you can either do that by giving out your token, but you can't do that for forever. Or it just takes a lot of work, takes months and months of work, which is what they're doing now. They only launch a couple indexes a year, like one or two, and it's a ton of work to do it. Well, recently they came up with this thing called PRTs, and it changes everything. They've already done one successful run through, and it was amazing. But basically, the way it works is they're called product revenue tokens. And if you, Andy, see an index coming up, say it's the AI crypto index, and you're like, "Ooh, like I think I'm really bullish on that. I think a lot of people are going to want to invest into that." Um, what happens is if you're an early depositor into that AI crypto index to help supply liquidity to bootstrap it, they're going to give you what's called PRTs, and these are tokens. And those entitle you, Andy, to a portion of the revenue from that index forever, forever. So imagine the S&P 500. If you could get 1% of the revenue from the S&P 500 for the rest of your life, you would be like obscenely wealthy. Like annually, the amount of money you'd make would make your eyes water. Okay. It would just be absurd. So that's kind of the play. So people are like, oh, this could be the next big index. This could be a multi-billion-dollar index. And I'm going to own 1% or 10% of this index's revenue. And so they deposit early. Again, the more you deposit, the bigger portion of the PRTs you get. So it's an incentive mechanism to get people to deposit into these indexes and to bootstrap them, making it so they can launch the indexes really quick, but also making it so that they kind of know which ones are going to be popular versus the ones that aren't. And what's cool is these tokens are tradable. So that means they can get like a market determined value. So like basically they can go up and down in value. So if people are really bullish on the Solana index, that token could skyrocket. So you now have a protocol index which can launch new tokens for that protocol endlessly for every new index they launch and without diluting their initial supply of index. And then this is a weird Goldilocks thing because typically you couldn't do that, right? Like Bitcoin can't go launch new Bitcoin tokens and it wouldn't work with what they're building, right? But this actually doesn't dilute the value of index. It makes it more valuable because a portion of all PRTs for every launched index go into the index coup treasury. So the index token's like an index of all the PRTs. So every token they launch actually makes their token more valuable over time because they got the additional revenue from the index, but they also got, as those tokens appreciate in value, go up and down. And so it's got me really bullish because I call it the infinity gauntlet for a project because essentially like projects need incentives to get people to do what they want. Last cycle, it was by printing new tokens, yield, like high APY yield. This cycle, they're smarter. They're doing variable incentives. It's kind of like when you open a Pokemon pack, you don't know if you're going to get like the best card or not good card. That's what airdrops are. They're variable incentives. Last cycle was a certain APY. This cycle, it's like you don't know what you're going to get. You don't even know if you're going to get something. You deposit into a protocol. You hope you're going to get an airdrop. If you get it, you're super stoked. If you don't, bummer. But airdrops also you can only do once. I mean, maybe you could like span it out over seasons. People are trying to do that, but like you only have so many tokens to airdrop. Is the point. With PRTs, endless. Every new index that you launch comes with a new PRT that doesn't hurt the value of the old PRTs, and you can incentivize endless amounts of indexes. And so once I understood the fundamentals, I was like, oh my gosh, this is amazing. And so I'm super, I know it's a long rant. It's kind of hard to explain though. I'm super
I love it.
bullish on index. It's really small. It's like 26 million in market cap. And, if you think about if it becomes the index for all of crypto, so it's what is that, 10x to 200 million, 100x to 2 billion, and then 1,000x to 20 billion. And so it's like, I don't know. Like that's how I think. I'm kind of a degen where I'm like, okay, how big could this go? I know everyone else does it though too. So I'm not saying it will go that high. I'm just saying that's the spectrum of in my brain. So yeah.
Yeah, no, I love it. Well, I was already looking at personas because you had mentioned it, and a few people in my community were talking about them. So I definitely will be checking that out in more depth. And I'm already into index because we talked about that forever ago, and I'm up. I checked my portfolio while you were talking. I'm up like 350% or something from that one. But when you told me about that one, I immediately understood it. I'm like, index funds they were needed in crypto. They make tons of sense. So for index, you're tripling your position. Are you just getting more of the governance token index? Are you how are you getting exposure?
Governance index, yeah, because the index is an index of all the PRTs. And the way that that works is the market always assumes that the value is going to find a way to flow to token holders. Right now, regulatory concerns are what keeps that from happening. But it's like with Uniswap. Like Uniswap went to 20 billion market cap last cycle. It's just a governance token. But it's because everyone assumes Uniswap will eventually turn on the fee switch. Same thing with the index. Eventually, as soon as they can, as soon as the market's ready, the fee switch will go on. And so because markets are forward looking and they're guessing at what's going to happen, that's priced in towards the future. And a lot of people don't understand that, but yeah. So yeah, buying index, tripled it, and their first PRT launch was a high yield ETH index, and they've raised like 250% of what they wanted to raise, and it was just like quick. So they're gonna be able to launch so many more indexes, and also the crazy thing is like everyone that holds PRTs, they're going to go try to get everyone else to go invest in these indexes because they have an incentive now. You have PRT tribalism, like people are tribal about Solana or Bitcoin or Ethereum. It literally changes everything. They had none of this stuff like just a month, 2 months ago. Your 350% you've made was based off of none of this. This is brand new. So that's got me so freaking bullish right now. And yeah, the PRTs are a
Love
cool
it.
thing to do too. If you want to do that, that's like, yeah, it's a cool idea too.
Super cool. Well, here at the very end of the episode, I want to ask one last thing for you to leave viewers with, and that is you've listened to us talk about where we're at in the current cycle, what the future might look like, some areas where Jesse is excited, looking forward. So if someone's listening to this, listening to you talk, and they are newer in the space, or maybe this is their first full cycle, what are some last like little words of encouragement or some advice as we go into the rest of 2024?
There are no shortcuts in crypto investing. If you're jumping into this to get rich quick, kind of like Andy said, you're better off sticking to the foundational assets like Bitcoin and ETH because at least you won't get wrecked that way. But if you're gonna go out into the risk curve, you'll make a ton of money on paper, but you will lose it by cycle end. I promise you, because there is no shortcuts. You will get outplayed this cycle. I promise you, if you don't put in the work. In life, there is literally no shortcuts. Now, crypto is a great, easy way to make life-changing amounts of money, but you have to take it seriously. You have to give it the respect that's due, and you have to put in the work. That means kind of understanding, at least like I talked about, the strategy, the probability, that kind of side things, risk management, position sizing. If you kind of understand those things, understanding yourself, your greed and your fear, because if your emotions control you, if you're a person that's like more controlled by your emotions, you're more often to lose because your emotions are going to steer you in the same direction like everyone's going. And I always say the average people don't make millions investing. It's the outliers that do. You have to be different. You literally have to be extraordinary to make a lot of money investing. And if unless you're like compounding over time and patient, but that is a form of extraordinary because like most people aren't willing to wait 40 years, to make millions of dollars. So in any way you look at it, you have to be extraordinary. By definition, average will yield average results, and most people are going to lose money. And so give it the respect this due. Start listening to books. Like take this seriously if you want to make money. Otherwise, you're going to be like every person this cycle, which later in the cycle, things are going to heat up. You're going to get really excited. You're going to get really greedy. You're going to put way too much money in. You're going to ride to the top. You're going to think it's going to keep going higher. You're going to watch it fall, collapse. You're going to get mad, say, how did this happen? Lose more money than you started with. And it's just going to be a mess. So give it the respect it deserves.
I love that. Very wise words. I fully endorse and agree with all of them. But that's it. Thank you, Jesse, so much for taking the time out of your day to chat with me. Always a good time. Appreciate you being on the podcast.
Yeah. Thanks for having me.
Thanks, everybody, for listening. See you in the next one.